Hey there, let's paint the picture a bit. It's a bright day, just like another normal day. Everything going on just fine, but wait, something bad happened. Life throws you like a curveball. Maybe a car breakdown, job loss, retrenchment, or series of tough situations. Chances are you have been through this or know someone who had faced this before. That's why we are here to talk about an absolute gem in the world of finance, the mighty emergency fund. Think of it as your trusty sidekick, always ready to swoop in when you need it the most. Today, we are teaching the fancy jargon and diving straight into the world of emergency funds. It's like having your personal money cushion your rainy day stash. And we are going to learn how to build and safeguard it. So, whether you are fresh out of college, university, or a go-getter in your career, or just someone eager to level up in your career ladder or your financial game, stick around. Let me tell you more right now. More than 50% of people say an emergency fund is a higher financial priority post-pandemic after the COVID-19 era. This tagline is taken from the CNBC News. The pandemic has taught many individuals the importance of having a buffer for unexpected situations, leading to a change in their financial priorities. With the pandemic affecting the job stability and employment opportunities, people have realized the value of having this emergency fund to weather potential job loss or income reduction. An emergency fund can help prevent individuals from relying on credit cards or loans during tough times, leading to a better financial stability in the long run. Therefore, calculation and setting up emergency fund is a crucial step in achieving financial stability and preparedness. First of all, assess your monthly expenses. Review your monthly expenses, including rent, mortgage, utilities, groceries, insurance, transportations, debt payments, and other essential bills. Consider factors like job stability, health condition, and family responsibilities. If you have dependents or work in a hazardous industry, you might lean towards a larger emergency fund. Then taking the rule of thumb, it is to have first stage 3 months worth of living expenses, then grow into 6 months worth, maximum 12 months worth. So for example, if your monthly expenses are 5,000 ringgit and we're setting up a 6-month emergency fund, target amount would then become 5,000 times 6, which is 30,000 ringgit. Alright, now we know our target as 30,000 ringgit. Next, we should open a dedicated saving account specifically for your emergency fund. Keeping it separate from your regular spending account will prevent you from using the funds for non-emergency. Anyway, if the target amount feels overwhelming, start with small contributions regularly. Consistency is the key to building up your emergency fund over time. Then, of course, looking at the amount of saving you can do monthly, which is the difference between your income and expenses. Okay, check out this formula. So you can automate your saving by setting up recurring transfer from your salary or income account to your emergency fund savings account. This ensures you contribute consistently without having to think about it. Now, here's a pro tip. Cut unnecessary expenses. Little changes in daily habits can add up to significant savings over time. So treat your emergency fund like your VIP guest. Now it's time to decide where to stash it for safekeeping. Meet John, a young professional working in Kuala Lumpur. He just built up in his 6-month emergency fund, totaling 20,000 ringgit. John decides to park his fund in a high-yield savings account with an annual interest rate of 2.2% per annum. You can check out the OCBC Flex account where you can move funds between pots anytime you like with just a swipe. It's that easy. Save pot 2.2% a year, then there's a spend pot for 0.3% a year. With this choice, John's emergency fund will earn an extra 440 ringgit in interest in the first year alone. Plus, it is easily accessible in case of any emergencies. Now, let's explore another options, a money market fund. You can do it with Amanah Saham, ASNB with ASB, ASB2, ASM, or even the Touch and Go Principal Fund. Public Mutual Money Market fund, or many others. These funds invest in the low risk, short term securities offering decent returns while keeping your money very liquid. Meet Sarah, a freelancer with a fluctuating income. She decided to keep her 15,000 emergency fund in a money market fund with an average return of 3% per annum. The money market fund provides Sarah a slightly higher return compared to a regular savings account. Before locking up her fund for the extended periods, anytime you can just take out. Here's a third option: fixed deposit accounts. These accounts lock your money for a specific period, usually offer higher interest rates compared to the regular savings account. Say hello to Mark, a seasoned investor looking for a secure and high returns account. So he allocates 25,000 ringgit for his emergency fund into a fixed deposit account with an interest rate of 4% per annum. Roughly now you can get this amount. So with this decision, Mark's emergency fund enjoys higher return with remaining safe in the fixed deposit for a specific time, say 1 month, 3 months, or even 5 months. There you have it. Excellent options for keeping your emergency funds safe and growing here in Malaysia. Remember, life doesn't stand still, and neither should your emergency fund. Reassess and adjust your saving plan as needed. If your expenses change or your income increases, consider increasing your monthly contributions. The big question now. When do you use the fund? Well, an emergency fund is strictly for genuine emergencies like sudden medical emergencies that not covered by the insurance, job loss, or urgent repairs of your car, your automobile. It's not a vacation fund or a premium outlet fund. But hey, life happens and sometimes you might need to use it, right? If that happens, don't panic. It is meant for this purpose. So just take it to survive through. Once your financial situation stabilizes again, make replenishing your emergency fund as a priority. Congratulations, you now have the secret to build and maintain your very own emergency fund. With this financial safety net in place, when you face life uncertainties, you can face it with greater confidence and peace of mind. Before we wrap up today's episode, let's take a moment to recap why having an emergency fund is an absolute game changer in your financial journey. An emergency fund acts as a financial safety net on top of your insurance, providing you with peace of mind during unexpected situations like minor medical emergencies, job loss, or urgent repairs. If it safeguards you from relying only the credit cards or loans during tough times and helps you stay afloat without sacrificing your long-term financial goals. But here's the best part. Building an emergency fund is within your reach, regardless of your income level or financial expertise. It's a vital part of your overall financial planning and is one of the first steps towards achieving financial resilience. So I encourage you, yes, you, to take action today. Start building your very own emergency fund and embrace the power of financial preparedness. It's not about saving huge amounts though. You can do it consistently, a bit by a bit. Remember, every little contribution also counts. Whether it's 50 ringgit, 100 ringgit or more, right? The key is to stay committed to your financial well-being. Here's what I want you to do. Set a specific goal for your emergency fund. How much to save monthly to get into a 3 month worth of living expenses as soon as possible. So let's do this together. Comment below, start building your emergency fund today and pave the way for a brighter future and more secure financial future.